All right. Well, welcome to our Funded Trader webinar series. This is the second in the series. This one's called Every Trader Should Be a Funded Trader. Big, bold words, guys. Strong words. Find out why and how. You know, we've been talking a lot for the last few weeks about being a funded trader and the concept of it, a prop trader, whatever terminology you want to use. And not just whether or not you should be one, but how to do one and how to do it right. And today we're going to do a little bit of an in-depth exploration about the systems, how they're configured, and um, how you can set yourself up right, and why you should be a funded trader. I think that's a really important question. And it's funny. I talked to. We're going to talk a little bit more about this, but I talked to some of our higher net worth students, Pat, and a lot of them have prop accounts. A lot of them have prop accounts, and we're going to get into why they're doing that. All right. So, guys, I'm joined today with Patrick. Patrick's a 20-year trading professional. He's developed the Modified Market Profile program, which is regularly sought after by top firms, top companies. People want to understand what Pat does and why it's so successful. You've taught thousands of traders. You've taught thousands of traders just at Target alone, and then before Target, you were at a different firm. You've got countless success stories. If you don't know the stories, I recommend go check out our Trust Pilot. You'll see what our students have to say about what Pat does. All right. Pat and I own this together. We are hold on one second here. We're partners in Target. We're partners in Bubba. We're partners in Nova. I'm a 25-year industry veteran. I'm a former investment banker. One of the things that with trading, I'm involved in trading education, involved in the software, but I'm not. I joke about the hair club for men reference. I'm not only the president, but I'm also a client. I use our software. I use our programs. When things work, I get the benefit of it. When things don't work, I feel the pain just like you guys do. And that makes me go in and want to change it and fix it and make everything better. So Pat and I will be hosting you guys today. Quick disclaimer, this is for education purposes. We're not giving you financial advice. We do recommend speaking to a financial advisor if you need financial advice, comprehensive wealth management, and all that other good stuff. Guys, there is a risk to trading. And one of the things we're going to talk about today is how to relieve yourself of some of that risk by using prop accounts. So it's funny that this disclaimer in it talks about financial loss and financial risk, when in fact, one of the most important things we're talking about today is the idea of being able to take less risk and still have a massive upside. So every trader should be a funded trader. These are strong words, guys. Very, very, very strong words. I can tell you that the funded trader concept is a newer concept when it comes to trading. The prop firms popped up about 12, 15 years ago now. You started seeing them. They were small. They were here and there. They weren't super popular. And Pat, let's be frank, we were against prop firms for a long time.
Long time, long
Yeah.
time.
I would say just recently, where some of the larger companies have started associating themselves with prop firms and the credibility has come up in the firms themselves, have we really stepped back in and decided that this is an avenue that we want to dab into.
I also
Um,
had an insider view of what was going on, and I knew the vast majority of them were absolute frauds.
yeah. Yeah, and we're going to get in. We're going to talk a little bit about that and how they're configured and why you have to really look for certain things when you go to prop firms. So now it is widely accepted. You see prop firms in futures, you see them in forex, you see them in options, you see all kinds of different prop firms out there now. I didn't realize how internationally popular forex prop firms were. On a whim, I Googled it, and I didn't realize that there's probably 30 to 40 times as many forex prop firms out there as there are futures prop firms. They're just all over the place and they're popping up everywhere. And one of the reasons they're popping up everywhere is, guys, this is an unregulated industry. Prop firms, there's no supervision, there's no regulation over them. And that is both good and bad. Okay. So just so we're all talking on the same level, that is both good and bad. The downside is that's got a certain level of caveat emptor. Okay, legal speak, protect yourself. Okay, you've got to protect yourself. You've got to know what you're doing, what you're getting involved in to make sure you're protected. The upside of it is you're not messing with your own money. You're messing with other people's money. You're messing with the firm's money. Okay, so prop stands for proprietary account. Okay, so it's a proprietary account to the firm that you're trading it at. Okay, so you're not trading your money, you're trading their money. So they're the ones that are really carrying the bulk of the risk with it. So being unregulated has some good sides to it and it has some downsides to it, but we're going to talk about a little bit more about that in a minute. Some of you guys are experienced with prop firms. I'm going to run through a 30,000-foot overview just very quickly so everybody understands the process and the structure. So we're all talking apples to apples. Okay. So the process of getting funded, it starts with a general application. You fill out an application with the firm, they accept you. I don't really know anyone they've rejected unless you're barred from that firm for whatever reason. Some firms will bar you if you've had fights with them, if you've tried to do something that they're not allowing by the rules or whatever, they'll bar you. For the most part, you should not be barred by a firm. There should be no issues with that whatsoever. And from an unregulated standpoint, they don't have KYC rules, but they do require you to file W-9s. Okay, so you get your payouts. Is it a W-9 or whatever the other one is? You are required to file tax forms, so don't be surprised when you get that from them because you will have to pay income tax on the income that you receive. Okay. Second process is the evaluation. Okay, and this is essentially a SIM account that you will be trading according to certain parameters or systems that they have. Pat, did you want to talk about that for a sec, about how the eval looks?
Most of these prop firms, the vast majority of them, essentially just say, you can't do this, you can't do this, you can't do this, have at it. And that's it. And they want that. They want people who are absolutely not trained, not experienced, and don't have a method. And Mike's going to get into that in a minute, because that's where the vast majority of these firms make the bulk of their money. It's not on you winning and them paying out and them keeping a portion. It's on you consistently failing.
Right. Exactly. Exactly. So you have your application, you take your evaluation, assuming you pass it, you get funded. And now you have a funded account that you will trade for profit within certain parameters. If you're doing well and you successfully keep your funded account, you'll reach a point of payout. If you fail out, okay, you go back to the eval process. You have to re-eval back in, get funded, and do it again. And just like Pat said, most of these prop firms make their money on the people who say, yeah, I want to trade other people's money. I don't have a system, I don't have anything, but I know how to trade. I'll pay that whatever, 150, 350, $99, $20. It doesn't matter the amount. They'll keep doing it and keep doing it and failing at it. And that's how most of these prop firms make money. Some of these firms have people taking evals, failing it 5, 6 times a month, meaning they're failing their eval within a day or two. Okay. They're not paying attention to the rules. They don't know how to do it. And I thought to myself, who's crazy enough to do that? And I was talking to one of the owners at a prop firm, and he said that anywhere from 60 to 80% of the evals at any given time will fail that week. That week, not that month. Okay. So having a system and being able to separate yourself from that herd of sheep there, okay, and being able to stay funded and get to the payout stage, that's where the magic happens. Okay. So it is not uncommon for people to get and stay funded. The question is how do you do it? What's the best method for doing it? So from a process standpoint, you apply, you take your eval, you get funded, and the goal is to stay funded. Otherwise, you're back to the eval process, and you just keep going back to the eval process if you fail out. All right. So what do you get when you're funded? You get a funded or a prop account. Like I said, this is a proprietary account. So this means that if you're trading at Apex. Apex has an account that gets assigned to you. Okay, it's their money. They're in control of the money. They are the fiduciaries or the trustees. Now, I'm going to tell you, okay, and what Pat was talking about is a lot of these companies will keep you on a SIM account. You'll trade the SIM account and you'll get paid out by the company, even though you're not trading a live account based on your winnings. Okay. You'll get paid out even though it stays on a SIM account. And you say, well, that doesn't sound right. Okay. I'm trading a funded account, aren't I? Well, guess what? I told you this was unregulated, guys. A lot of the firms out there will do that. Go ahead, Pat.
This is just so everybody can understand this. You're going to say, well, if I am profitable and I am making money and they are paying me out, what do I care? Let me tell you why. Because when you have a week or two, like you did last week, when it was an industry-wide problem where people were not being paid out, it's because they didn't have the money to pay them out. Because people were taking monster trades, stopping. They played by the rules and they didn't get paid out because there was no money to pay them out at that amount. It's just not there.
Right. Well, especially when the bulk of the income is coming from the application and the eval fees, right? So when
Right.
the bulk of your income is coming from application and eval fees, and then suddenly you get a bunch of traders that took these monster shorts, right? They took these monster day trading shorts. They have huge payouts that week. There's not enough capital coming in off of the failed evals to pay those people out. And I'm not saying that happens at every firm, guys. Please don't misunderstand me. And a lot of these bigger firms have cash reserves and things like that. But understand, a lot of firms delayed their payouts, days, couple of days here and there, until they could replenish their cash reserves to make those payments. Okay. That's not to say that that's every prop firm. And I want to be crystal clear about that. A lot of the prop firms have associated FCMs and IBs, introducing brokers, okay, that they have actual accounts that you're trading that you get paid out the profits from. Okay. It's very important you understand the difference between you're trading a SIM account and you're getting paid out based on your earnings out of eval fees versus you're trading an actual account and you're getting paid out based on your actual earnings. Massive difference between the two. And finding out what firm is what is not easy. Okay. And it's not always correct, meaning that there's a downside to trading live accounts too. And the downside, I'm going to tell you, the downside is you now have to deal with slippage. You have to deal with fill issues. You have to deal with all of those other things you would normally have to deal with on a live account. On a sim account, you don't have to deal with those things. So you're playing a video game for money. Okay. You're playing a video game for money. Pat, is that a fair analogy?
It's a case in point, one of our students who blew through the eval process. He was trading 17 contracts in the NASDAQ. He went live. He sends me a screenshot. It won, but it only took 4 contracts. What's going on here? I said, there's not enough volume to fill you.
Yeah.
You can't do that. It
Right.
sounds wonderful in sim world. I know of somebody else who took a massive loss on 40 contracts in the Dow. He got slipped at several dollar increments each
Dollar increments. Dollar
dollar.
increments.
Okay.
Yeah.
It doesn't work that way, which is why you've got to have a method in place to protect your downside.
Right. You have to know what you're trading and how. So it's very important when you're prop trading to understand that. And Pat said something really important a couple minutes ago. He said, it's not necessarily a bad thing if the prop firm is paying you out of eval earnings. Just know that that's what you're dealing with. Okay. Understand that that's what you're dealing with. And you want to deal with well funded prop firms, not necessarily one of the pop ups if that's the situation. Okay. At the end of the day, it's a video game for money if you're doing that. Okay. So understanding the difference between the two and understanding that it's not necessarily bad. Okay, that's an important side of that. So, so yeah, we talked about that. Let me just jump to the next one. So, one of the most important concepts is staying within the rules or the parameters, and you keep getting paid. Okay. This is a very simple concept to say. It's a harder concept to actually effectuate because a lot of times you're going to see inside the firms, each of the firms has their own little rules. Now, sometimes, and Joe, you and I were joking about this the other day. Joe's on the call with us. Joe said, yeah, it seems like they make up the rules as they go along. Yeah, but they also all seem to talk to each other. And it seems like they all kind of say, okay, hey, we're going to all have this max loss rule, or we're all going to have this trailing loss rule. They seem to have a shared set of parameters, like they all kind of got in cahoots and decided that's what they were. That's very true. The other side of that is, though, there's a lot of hidden ones. I'll tell you one hidden one that I actually got caught on was that there's a minimum trades per week rule at a lot of the firms. You have to execute a minimum number of trades per week. And I got caught on that because there was a huge amount of freaking volatility. And I sat back and said, listen, there's nothing to trade right now that I feel comfortable trading my method with. And I sat back and I lost my prop account because of it. Okay, I got bumped back out. So make sure that you know the rules as you're doing it. It's very important. That's why we only work with specific firms because we normally know all of the rules. All right. So, what's the downside? We've already talked a little bit about this, guys. You've got to stay within parameters. This isn't easy. Okay. Um, this is more than just being a disciplined trader. All right. You can be a disciplined trader, but if your system that you're trading doesn't line up with what the firm's parameters are, you're going to consistently bounce. You can have a phenomenal trading system. And I'll give you a great example right now. Any of you guys that are familiar with Bubba's blow off trade, all right? I trade Bubba's blow off trade. And you can't do it on prop accounts. It doesn't work. Okay. It's a phenomenally successful trade. Okay. It's a high probability trade. You can execute it, but guess what? You're going to blow out a prop account with your max daily losses on it. Okay. It doesn't work for prop accounts. It works great for small personal accounts. That's really where its value is. Okay. Understanding this your own system and merging your system, right? Adapting your system to match the parameters that you're trading. And Pat, I'm going to pull that one up in a second.
Sure.
We talked about knowing companies not doing payouts correctly. They are unregulated, guys. So make sure you're with firms. A lot of these firms, a couple of months ago, when the volume was slow, okay, back in November, you saw firms going into bankruptcy. Well, guess what? They go into bankruptcy. They don't have to pay you. You're a contractor.
Hmm.
Okay, they don't have to pay you. So they'll build up a bunch of fees and then they'll throw the firms in bankruptcy and then they'll go over here and start another one. And guess what regulator stops them from doing that? Nobody. Okay. So you have to pay attention to the firms that are there. There are some bigger firms in the industry, Apex, Top Step. Some of these guys, they've been around for years and years and years. But understand that doesn't mean that they can't get pushed to the limits. Okay. That doesn't mean they can't get pushed to the limits. The good thing that's going on right now with understanding that is a lot of them are in price wars right now. Okay. So they're in these price wars right now that they're driving down the eval prices. I remember when evals were $500. Okay. I remember when evals were 500 every eval you did. Then they got pushed down to 350. Then they got pushed down to 150. Now they're kind of getting pushed back up. But you'll get in these periods with like Apex and Top Step. Well, they'll have like $20 evals. It's crazy. Okay. And they're just trying to get a bunch of people involved in the system and kind of get them addicted to getting through that eval process. Okay. So keep an eye on that side of it. All right, staying consistent and active. That's one thing with prop trading is you have to stay consistent to your system, whatever your system is, and you have to stay active. You can't just trade it this month and then walk away from it for 6 months and then come back to it. You have to stay active with them. So when you decide that this is something you're going to do and you start doing it, you've got to set the time aside every day to do it. Okay. Now, some days you're not going to take a trade because the trade doesn't match your system, but you have to actively be there and be watching it. Okay. That's a very important side of this. It is a different type of commitment than having your personal account where, we've got a lot of customers where, hey, listen, I just picked up a big project at work, or I've got a trial coming up and I'm not going to trade for the next 3 months. That's fine, but it doesn't work when you're prop trading. Okay. Okay. Why every trader should be a funded trader. We've kind of hit on this, but we're going to really drill it down right now. So leverage yourself safely. Okay. When you start day trading, okay, a lot of us started, we have the margin in our accounts, right? You can get crazy leverage on your personal accounts when you're day trading, especially when you first start and you're first starting to learn this. It's a dangerous thing, okay? Because you can get massive amounts of leverage on pennies for trading the micros, and it gets a little crazy. And if you're day trading and you're closing out and you're not getting into those overnight margins, you can get some pretty heavy leverage. Okay. Now, understanding the difference between leveraging and margining your personal account versus trading a prop account. Okay. This is an important concept. If you're trading your personal account and you've got $5,000, $10,000, $25,000, $100,000, you're putting that money at risk. When you're trading a prop account, you're putting your eval at risk. Let's say your eval is 350 bucks and you're paying 36 bucks a month for the charts. Okay? That's what you're putting at risk. You're trading a $150,000 account, a $25,000 account, a $50,000 account. But your risk is your eval cost. Pat, you had your hand?
Also, everybody needs to understand that once you put that money in that brokerage account when it's yours, that's dead money now. You can't do anything with it. It's stuck there. And I'm going to tell you what else happens. You get a false sense of security with that money in there. There's a tremendous difference when you just decide to go rogue or you do something on your own away from the method. I have never seen so many people happy to lose $10, $11, $12,000. But boy, let me tell you something. When they blow their eval and they got to pay the 50, 75 bucks to get turned on again,
Re-put it.
that their mindset changes. They are bloodthirsty killers after that with their
Yep.
risk management. Remember that.
Yeah. Yeah. And that's a big one. That's a big one. And it's funny because we kind of laugh about it, we joke about it, but it's one of those like it's funny, not funny. People will complain about the $75, reset fee, or let's just say it's a $350 eval. They'll complain about that, but they won't complain about losing $6,000 when they're trading in their account because they did it.
Mike, if I may also, Mike and I ran a CTA. I'm one of a handful of guys on this planet that's licensed level 3 and 34, which is futures commodities, and the 34, which is Forex. I managed a guy who refused to listen every single day. And I told him, do not do this. Over a month and a half, he lost $3.5 million because he refused to listen. But it was his money, so he didn't care. You want to know what would have happened if he was trading somebody else's money and he got shut off when he hit his end of the day max? He would have lost a whole hell of a lot less. His mind would have changed immediately because he had to keep paying to play. That's a key to this, and don't underestimate this.
Yeah. And by the way, we watched him after we told him multiple times, don't do it, don't do it. We watched him lose over $3 million. And it was not a long period of time. And granted, the guy was worth a considerable amount of money. So let's not misunderstand that side. But he could have been trading 50 eval accounts and lost a lot less, but he had decided he wanted to do it that way. So and by the way, that leverage concept ties into I like this term, guys. Sorry if it offends anybody, but protect your ass. Okay. And by ass, I mean protect your assets. All right. Sorry for the cussing, but at the end of the day, we work hard for our money. You worked hard for your money. Okay. Your money has an inherent value. If you've got an investment account and you've got 25, 40, 50, 400, $5 million, whatever you've got, you worked your ass off for that money. Protect it. Okay. Protect it. One of the beautiful things with being a funded trader is you get preservation of capital, guys. Your risk is your eval money, yet you're able to go out and trade 25, 50, 75, 150, $250,000 accounts for the cost of the eval. Okay. And guess what? If you fail, you would have failed a lot worse in your personal account, a lot worse. So we've got multiple customers who are $5 million plus net worths that per trade prop accounts, guys. This is why. This is why right here. It doesn't matter whether you've got $2,000 to your name, $2 million to your name, or $200 million to your name. There's no reason to put it at risk. Go ahead.
And I'm going to tell you something, and I've spoken to many of these people, and the answer is exactly the same. Well, why would you do that? Well, because in my business, I put my own money up first. I proved that I could do it. I kept the money that I made. Now I can use someone else's money, knowing for a fact I can do it on a larger scale, which is exactly the same thing as an eval. So if you start off and you hit those numbers, you can jump directly to $100, $150, $250,000 account, because if you can do it with 2 contracts, you can do it with 5. If you can't do it with 2, there's no way you're going to do it with 5.
Exactly. Exactly. And the other side of it is, and this isn't something we talk about, but we just briefly touched on it, was, getting filled when you're dealing with larger amounts is hard. Jim Simons, who was one of the advents of algorithmic trading, one of his biggest frustrations was he was able to make active $20 million. And when he tried to get from being a $20 million fund to being a $200 million fund, one of the biggest struggles he had was activating the capital, meaning being able to actually trade it for profit following a system, because he couldn't get fills. He ended up having to get into different markets. He ended up having to trade commodities and options, and then he was trading forex. He was trading all these different markets because he couldn't activate the capital. When you start dealing with larger balances, it gets harder and harder and harder to activate the capital. So it's something to think about as you grow. So we've hit on all these points. It doesn't matter net worth or investment size. These rules apply to you guys. These rules apply to everyone. So how every trader should be a funded trader. So it's not just why you should be one, but how you should be one. And one of the tricks to understanding this is getting yourself set up right. Okay. Getting yourself in the process and in the game in a way that you are maximizing what you can do so that you're doing it effectively and efficiently with the time that you have. All right. One of the biggest ones here, guys, is understanding the parameters, understanding the rules that you're trading against. Every prop firm is slightly different. Joe had a point. They're very, very similar, but there's slight variations, and you need to know what you're trading against. You need to know things like your daily loss limit, your max trailing loss. Okay. You need to set there's a lot of hidden requirements. Okay. Things that you don't necessarily see on the front end. For example, understanding your minimum weekly trading, times you're allowed to trade. Okay. There are times that you're not allowed to trade, that your trades don't count. Okay. Especially when you're dealing with futures, which is a essentially overnight market. A lot of the prop firms don't let you trade overnight. You have to trade pit sessions. Okay. Some of them let you trade overnight. You have to know what the rules are so that you're maximizing your time efficiency. Set your system to the parameters. Pat, I want you to walk them through like how you would use this, use your particular parameters and how you would set this up to look.
For example, there's all different types of account sizes, and whichever one works for you is fine. Some people are going to say, why am I going to trade a $25,000 account? You can make a ton of money trading 9 micros. You have room to run things of that nature. So don't poo-poo the account size, okay? Everybody is different. I'm going to use, let's say, the $150,000 account size. It's just easier. The numbers are bigger, so they're easier to understand enough to do a lot of small math. So you got to trade at least 7 days. Your profit goal is $9,000. If you make $9,000 in one day, they are not going to give you the money, because all they're saying is, oh, this guy just took a trade and let it go. They want to see you show consistency. So you need to trade at least 7 days. Okay. And Mike will explain what happens after you get funded. They make things much, much easier for you, because this is case in point. A lot of our students were hitting these monster numbers per trade. And I think that the prop firm finally said, we're not making any money off these people renewing. Let's make the
Yeah.
money off the money that they're making. So
Right.
they laxed the rules after you became qualified. So the most important number that I want to bring up, or parameter, is the $4,000 end of day trailing max. If you lose $4,000, they're going to reset you. So how do you want to set this up? You're only going to get 2 to 3 really good opportunities in a pit session. Now, we used to say that was going to be a 24-hour day, but a lot of these prop firms will not let you trade in the overnight. So how do you want to do this? Well, we're going to set our markets up accordingly. So you really do not want to risk more than $1,200, $1,500 a trade. So for the $150,000 account, you can trade 5 ES contracts at a max risk of $250 a contract. That's going to give you a $1,250 risk. The NASDAQ, you can trade 3 contracts at a $400 maximum risk, which is $1,200. The Dow, 6 contracts, 200 max per risk, $1,200. Oil and gold, both 4 contracts at a max risk of $300 per contract, that's $1,200. So I'm calculating slippage in here. So let's say, for example, you take a trade in the Dow, a trade in the gold, and a trade in oil, and you lose all 3 of them. That's giving you a 3,600 max risk loss for the day. You've got 400 to cushion yourself. You're not going to take 2 trades simultaneously. So if you get traded, if you get slipped horrifically on a trade, you're going to know your next trade. I can only trade 1 contract, or say, I'm not going to do this today and come back tomorrow. Most people don't think of these things. They see the $150,000 account size, maximum 17 contracts. I'm trading 17. You're insane, because you might get filled, maybe, possibly, on the ES, but the amount of risk you're taking is enormous. You're going to blow out 1 trade, and then I can pretty much guarantee you, trading 17 contracts in the S&P, that's going to put you a one trade with a max risk loss. Your $4,000 end of day trailing max is gone right there. Sure, you can keep on trading because, oh, well, I got to get back now. Well, guys, what do you think is going to happen with 17 contracts?
Right.
It's not going to work. The idea here is to minimize your risk. The idea here is to keep what you make. What are we talking about? I have a method. So what is this method? If you win your first trade, you can risk half of it, or you can risk all of it. But if you lose or break even, you're done for the day. Those are just the rules. As long as you keep winning, you can keep going, risking the same in each consecutive trade. I've had people that go 7 for 7, 8 for 8. They keep going. As long as you win, you can keep going. If you lose 2 out of 3, or you lose 2 in a row, you're done for the day. We're here to keep you alive, so you are alive long enough to get the winners. And our method, we're above, what, I think 76% winners on our method in our trading room.
Yeah. Over 5 years, we've been over 72%, year in, year out, every year.
And this year, we're year to date over 76%. So what does that mean? That means, guys, let's say you've got days like you've had the last few days, with the exception of yesterday, you may not get any trades at all. And guess what? Well, that's okay, because you only have to trade 7 days to reach your goal. You reach your goal, you get, I think with Legends, it's a 90% payout. You're taking none of the downside risk. They are, but they want you to prove that you can do this. What happened afterward, a lot of our guys were satisfying these things in a couple of days. And when they went live, you didn't read the rules. You can't make more than X in this in a day because that's just taking too much risk in their minds. But guys, going back to what Mike had said before, they make the rules. You signed the deal. We're showing you how to beat them using their rules.
Exactly. Exactly. So, and that's one of the biggest things. I mean, set your system to your parameters. When you know what the rules are, build your system around it. Pat, you just said it. Just because you have 17 contracts doesn't mean you should be trading 17 contracts.
No.
Okay.
You know what happened with
And
17 contracts on the NASDAQ?
right, exactly.
Your slippage
Exactly.
alone might blow you up on the day.
Yes. Yes. The other side of that is you need to understand the program itself that you're signed up for. You need to understand your payout timeframes. Are you, there's firms right now that will switch to a daily payout platform. Are you on biweekly payout platforms? Are you on monthly payout platforms? What is the schedule? What is the percentage? Okay. The percentage is huge. Now, it used to be, I remember when it was 50-50. I remember when it hit 60-40. I remember when 70 was crazy. A lot of the firms are right now, you start off at 70 and then you get up to 90. Legends is at 90. Okay, 90% payout. That means if your prop account made $10,000 this month, okay, you get paid $9,000. Okay. 90% payout. That's incredible. And that's why we keep saying to you that why would you use your own money at that point? Like, there's no point in it. At 50-50, I can understand. At 60-40, okay. 75, it's starting to turn. But at a 90% payout, that 10% difference isn't worth risking your own money, in my opinion. Again, in my opinion, it's absolutely not worth it. So, second big thing that you should look into with the firms is understanding their support. A lot of these firms have zero support, for lack of a better way of expressing it. Their pop-ups, they've got no one on a phone. They've got AI chat, and you can't get the help when you need it, particularly on the reconfiguration and the reset side, guys. Very, very, very important that you know that. Find out what support firms have phone numbers you can call to get a hold of people, or emails that you can get back from, not just the chat. You want live answers from live people. Okay, very, very important to look into that. You'll see the bigger firms, even just because they're big, doesn't mean that they have live support. Don't be fooled by the fact that just because it's a $600 million firm, that they're going to allow you to talk to somebody live. They're more worried that that live person's going to say something stupid, that they're not going to allow you to talk to live people. So just make sure you're looking into that, making sure you've got access to live support. Who are they backed by? Okay, what do I mean by that? This is super freaking important. Okay, you want to know who the owners of these firms are. You want to know who they are, what their other relationships are in the industry, and you want to know that they are financially solvent and they've got some skin in the game or some risk if they ever defaulted. Okay. One of the things you should definitely look into is who's their FCM? Where do they get cleared? Okay. Because if they're trading live real money, you want to know that that clearinghouse can clear those size trades. Okay. That's super freaking important. That affects every aspect of your profitability if you're trading live accounts. Okay. It's also going to tell you how big they really are. Because if you see some nickel dime clearinghouse, you know right away that this is a BS firm. But if you see that they're clearing through Trade of Eight, or you see that they're clearing through any of the big guys, okay, you know that you're in a decent place. Okay, so definitely find out who the FCM is. Also, if they're dealing with an introducing broker, who the introducing broker is. Um, I'll give you an example with Legends. One of the reasons we love working with Legends is the owner of Legends also owns an introducing broker. Okay. Now they're separated. They're completely separate firms. One has nothing to do with the other. Okay. But I know that if there's a problem with the prop firm, that the owner has got enough of a personal net worth that he's not going to let it default, number one. Number two, I know that if there's a fraud or a compliance issue, it's going to affect the main business. So he's going to do everything above board. That's my personal opinion. He's going to do everything he can to make sure that everything is done by the book and is compliant and take away any form of fraud. Okay. Because it will affect his licenses and everything else on the other side. So when I look at the companies, I'm looking for somebody, and I call that skin in the game, right? What's his skin in the game? What's his real risk here if something were to go wrong? That's the kind of thing that I'm looking for. And that's what worries me about some of the bigger firms is they're really just a freestanding firm and they have nothing backing them other than the individual assets of that company, the cash flow of that company. Okay. Very important about how every trader should be trading. Okay. Yes, we kind of talk about it like it's a video game. Yes, you're trading technical analysis. Okay. But you are not excused from live market trading. What do I mean by that? Politics aside, okay, there were some pretty freaking big news announcements in March regarding tariffs that sent the markets on a tizzy, okay? Pardon my French, but on a shitstorm. Massive 900-point drop in the Dow. You don't think that affects a sim account, you're crazy. Okay. You still have to know what's going on in the market. You still have to know news. You still have to know what your daily cycles are, right? You shouldn't be trading at lunchtime. Okay. Afternoon trading, understand there's going to be a flurry just before the close. Okay. You still have to know where your gap fills are, that your gap fills are going to happen, what time each one of the markets opens in the morning. You still have to pay attention to the live market trading. You cannot just turn a blind eye to that and trade in a vacuum. That's super important to understand. Just because you're not trading your own money doesn't mean that those rules don't apply. And it sounds, some of you you're going to say, why does he even have to say that? That sounds redundant. You'd be shocked at the number of people who suddenly don't need what's going on in the live market to do their prop accounts. Okay. You still need the market commentary. You still need all the things that you would do with a live account. Agreed, Pat?
Absolutely. And we teach this every
Right.
single day. Because if you don't understand what's coming at you, you're going to get run over one way or the other. Because what Mike was saying about news, the unwashed masses think that good news means the market goes up, bad news means the market goes down. There is absolutely no proof that shows that that's what happens. It's random. And the reason being is because the handful of entities that push the market vertically, either up or down, they're not waiting for the news. They just wait for it to come out. They're making the news. They don't care what the news is. They want everybody taking the other side of that trade so they can run them over. And people every day, oh, how did that happen? Because you don't know what you're doing.
Right.
That's why.
Right. Right. And that knowledge side is, and again, I'm not, we're gonna do a little, hey, sponsored by here with Target, but Target Trading teaches that. Okay, we teach that, and there is an inherent value there to understanding the market itself as a whole, understanding what's going on and how to work within it.
And we're
Also
in the room
understanding,
every day, Mike. Every day when people send their trades in, you're required, whether you are on sim or whether you're live, your own money or a prop account, you're required to send in what you just did so I can burn it into your subconscious about these are your options. You
yeah,
can do this, you can do this, or you can leave. I can't tell you how many students I now have that are trading live prop accounts that after their first trade, done for the day, leaving. After they would
yeah,
let those things go and blow up 5, 6 times a month.
yep, yep. But now they take their trade and they go. And also one thing I want to touch on this because I normally would have just blown past this one, but this is a really important one. Understanding your risk management against your parameters with what's happening in the live market is imperative. Just in the last few weeks, we've had to make some significant changes to systems that we've had for 3, 4 years because of the massive volatility. Okay. Risk parameters had to be changed. Stops had to be moved because you would you'd blow out of a trade. You get stopped out of a trade and then immediately it moves in your direction just because the movement was so big. You are constantly adjusting. There's no way to sit back and just be a passive party to this. You've got to make the adjustments. You've got to stay involved. You've got to participate. Okay. What you, Pat, you and I were talking about. Look at the last 3 weeks and what you've had to do with moving your stops. So,
And I'm going to tell you something also. And I'm not making Vitch here, guys. Anybody can do this manually. You can, especially when the markets are orderly. Anyone can do this manually. Without the Trade Assist software, let me tell you something. There's no way I would have been able to take trades. As soon as I was in, I was freaking out. Done. I had
yeah,
to turn the bots off because they were ready to qualify another trade within seconds.
right, right. Right. It's crazy. It was crazy. And we had to make that adjustments and you had to understand how to trade within it. So how to trade, I've been asked by a couple of people, should I have multiple smaller accounts? Should I have one large prop account? What's the right way to do it? How do I manage multiple accounts? How do I do this? So here's just a word of advice on this. When you're learning to do this, and you're not experienced at trading multiple accounts, you're not experienced at trading multiple markets, first you have to learn to do that. Forget about having multiple accounts. Forget about the size of the account for a second. You've got to learn to trade so that you have enough swings at bat in that account, that one account, that you can do it. Now, I have seen multiple people have multiple prop accounts and be very, very successful with it. Okay. My recommendation would be that you get in, you learn how to do this, you start small, and that you build up. When you're able to do it up, you can have multiple accounts and you can do it. And what I would do is I would have different methodologies for each one of the accounts, different times a day, different markets that you trade, just so that if one blows out, you've got a backup still running. Go ahead, Pat.
I was one of our students, Tiffany. She's been with us less than 6 months, never traded a day in her life. She's already in prop accounts. She's got 2 prop accounts going. She made her first win, switched to another prop account because if she took a loss, it wouldn't go against her winning. So what did she do? She took another win and she was done for the day. So she's got winners in 2 separate accounts, one that doesn't affect the other.
Right, right. So and guys, just so you guys know, we will talk about how to do that, the strategies to do that. We do talk about that outside of this. We can get into a little bit more detail with that, but there is a concept that's come up. Okay, and this is a new thing. I want to be clear. This is not an old concept. This is a very new thing called prop farming. And you're going to hear it thrown around if you see it on social media and stuff. Let me just give you a brief understanding of what it is. People are opening multiple accounts. And what they're doing is they're setting parameters for how to trade each one of the accounts so that if one goes down or market conditions affect one, they can keep the others alive. Okay. I personally love this idea. Okay. I love this idea. I'm going to tell you, I love it so much. Pat and I are putting money behind the idea of building a prop farming software. Okay. And this, just so everybody understands, this is in development right now. Um, this is at a development stage. It's not completed yet. I still need somewhere around 30 to 45 days. We've been working on it for about 3 months. Okay. And what we're doing is we're building out a software that will allow you to prop farm, which will allow you to have multiple accounts and manage multiple accounts simultaneously. Okay. It's not done yet. It's based completely on Pat's methodology. Okay. It only takes 3 types of trades: reversal, inverse, right? Gap fill. That's it. That's all it takes. It doesn't take any other trades. If you know what you're doing, you're done by 10:30, 11 o'clock every day at the latest. Okay. It's designed to take your first reversal. It's designed to take a gap fill if it's available in the market, and then it shuts itself off. Okay. So we're working on it right now. It will not be available for use on live trading accounts. It will only be available for prop accounts. Okay. It's literally a prop farming software. So people have asked us about multiple accounts, how to manage it. That's my answer. We see a huge value in this. We think that this is a direction that the industry is going, and we want to give you guys the tools to be able to be successful at it. So we're literally in the process of developing it right now. I would say we're about a week away from the final beta testing stage, and then we're gonna have it live on our accounts to see how it works, and then we're gonna roll it out for you guys. Okay, so it is at that stage. It's very exciting. Um, I'm excited about it. I don't know if you can hear it in my voice, but I love the idea of what it can do. It also will stop that crazy like trying to manage multiple accounts at one time. So it kind of puts it all in front of you. All right. So why you're trading prop accounts, how you should trade prop accounts. Let me tell you a little bit about the programs that we have. We now have two operational prop trader accelerator programs. Those of you guys that are here, many of you are part of the prop trader accelerator program right now. This is designed to help you get and stay funded. Okay. It is a very specific program designed to customize what you have to the parameters that you have at your trading at your prop firm to get you funded and to keep you funded based on your risk parameters. Okay. Um, it is the system we have right now is built on NinjaTrader. We are developing it on other platforms so that you can use it at different places. But right now it is built on a Ninja platform. So it does work on NinjaTrader and Trade which a lot of the prop firms work with anyway. Here's what you get with it. You get the automated software, which is the HVA auto download. That's Voila or Presto. You'll know the name from that if you're a student of ours. You get one of those two systems. You get Executioner. All right, Executioner is the reversal inverse system. It is a trade assist software that lets you execute the trade at the levels. It does the hard math for you. Okay, it makes it easier to manage the trade without having to manually do it. And I'll tell you guys, Pat just said it, and I couldn't agree with him more. There's been trades last few weeks that we couldn't take manually. Okay, I personally am not fast enough to take some of the trades that were there. Go ahead, Pat.
Also, several of our students, when this volatility came in, they have the bots. And they said, well, the bars are lighting up to go long or to go short on an edge, but it's just not taking it. My response is, okay, measure that bar off, see how big it is. Wow, that's a 70-point bar. Yeah, your max
70
is
points.
20 points. It's not going to take it.
Yeah. 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 It's that I will say this particular software, pardon my French, but it saved my ass on multiple occasions where I would have taken the trade, but the software didn't take it and I'm trying to figure it out. And then I went, oh, that's why. And then, you stip yourself in the head and say, don't do that next time. So the prop trade accelerator comes with the HVAs, the executioner. Um, Comes with the live trading room. Guys, I just expressed to you the importance of understanding the market conditions, what's going on around you, when the news is coming out. This is a really big one. Okay. This is a really, really big one. Understanding when it comes out, understanding the news when it comes out and why you can't take certain trades is extremely important. Okay. This happens every day. Pat is in that room. He's giving you market commentary. He's telling you, hey guys, we got news coming out at 8:30. You can't take this news. You can't take a trade right now, or you should stay out of it, or this is the direction that we're looking at it going, etc. So he's giving you that market commentary as it comes out. It gives you access to the live trading room, the small group mentorship, the campus library, the ramp up classroom, guys. The classroom is huge. We don't talk enough about the classroom, Pat. We always talk about the live trading room, but the classroom's the chance when there's no pressure to trade right now, when you can ask questions. Hey, I was looking at this. This is what I saw this week. What should I have done? What did I do right? What did I do wrong? This is your opportunity to have that. It's twice a week, 7 o'clock for the futures trading. Guys, if you're not in that ramp up classroom, that's a place to be, especially if you're newer to the game and you're just learning it. It's a low stress environment where you get the opportunity to ask questions. And then last but not least, we have the trade review program. We are the only company in the industry that reviews every trade you submit. So if you submit a trade, Pat's going to go over it in the live trading room. If you're newer, he'll also go over it in the ramp up classroom. He's going to talk to you about how you analyze the trade, how good of an entry you made. Did you make the right trade? Should you have been trading? Okay. How you handled the exit. Okay. What your next steps should be. All right. This is a true trade review. Every single student that submits a trade, Pat will go through the trades live in the rooms and he'll go over them in the classroom. Cannot stress to you guys enough. We are the only company that I've ever seen that offers that. Okay. It's a massive value. We recently rolled out a second program. That's the Prop Trade Accelerator. We recently rolled out Prop Trade Accelerator Plus. Okay. So this is really designed around the Prop Trade Accelerator. Okay, so you get everything you get in that program, but you get one more software. And the software that you get is really important in these market conditions, which is you get access to the DaVinci software. The DaVinci software is a trend program, but where I use it and where I think it's the most valuable is on these gap fills. And these last couple of weeks where things have been absolutely nuts, and you've had these massive gap fills in the morning, just morning after morning in multiple markets. The software does the same thing that the executioner does. It does all the hard math for you, and it gives you the opportunity to take a gap fill in those markets. Gap fill is the highest probability trade we have. Okay, it's the absolute highest probability trade we have. And in this case, it's automated. And yes, you use this on your prop account. So you use the executioner, you use the DaVinci, both of them for the two different types of trades. Pat, anything else to add on that?
You've covered everything. I just want everybody to understand something. This is huge. The risk is being taken by someone else. Let's say you blow up twice in a month and the sign up fee is what, $100. Guys, let me tell you something. It stops you. It turns you off from revenge trading and being down $1,000 and then magically blinking your eyes and being down $4,000. The risk is not yours to take. And this is the reason why I was against funded trader programs for years, was because it was a 50-50 break. And you're saying to yourself, I got to trade by somebody else's rules, do what they tell me to for 50-50. I'm much better off doing it on my own. Well, now you can do your own method and it's a 90% payout. You're insane for not using somebody else's money. Insane.
I totally agree. I totally agree. We are given $1,000 off of the program right now, and then we've kept that monthly fee where it's super manageable for you guys. So, last thing I want to talk about real quick. I mentioned a lot of things about different prop firms. We do a huge amount of business with Legends. Legends Trading is a prop firm. They're not as big as some of the other big companies. But we do a lot of business with them. We've been doing business with Greg for a long time. We had our CTA run through him. We've got a lot of things that have run through Greg. I can't say enough good things about him. He answers the phone when we call, and I like the way he runs his company. It's very interactive, very good communication. He is tied to a brokerage, so he's stuck. He has to stay compliant. They have up to 90% payouts, guys. 90% payouts. Why would you trade your own money? Okay, can't say that enough times. All right. They have a ton of different account sizes. I think they're down to 25,000, and I think his largest are 150 or 250. Pat, do you know? I
250.
think his there. What is it? 250?
250.
Yeah, they're at 250, guys. So massive differences in account sizes. Look, you're trading 250, you're getting 90% payouts. If you know what you're doing all right, guys. You're doing all right with that. That's a job replacement type thing. Okay, if you know what you're doing and you work at it. He just recently rolled something out that I haven't seen anybody else in the industry do. He now has a lifetime eval pass. This is, pardon my French, but this is freaking huge, guys. Once you've passed your eval, you don't have to pass it again. Let me say that again. Once you've passed your eval, you don't have to pass it again. Okay. You do have to pay there's a small reset fee that you pay, but once you've gotten qualified, you don't have to pass it again. Huge, huge. Okay. This is the difference between working with companies that you trade live accounts versus working with companies that they pay you out based on the eval. Okay. This is why I said to you guys, there's a difference in companies. Once you pass the eval, you just pay your reset fee. So cannot say enough good things about that. I think it's huge. It does work. He does work with all NinjaTrader software. All of our platforms are designed to work on his platform, just so everybody knows. They work on others. They work on others, but we actually built them to work on his system. He also tailored back his evals to work against our trading methodology. And right now, guys, his whole system is 80% off. I don't know about you guys, but 80% off is a good number. It doesn't matter what the number is. So whatever you sign on for that initial eval price, he's given 80% off. I think I have there it is. And I'll drop a link in here if you're interested in signing up. I'll drop the link. Please use that link. We like that. We get credit for that if you prop on it. Use the code PropAX TRDR. It's right there. I'll also put this in an email to everybody's here with all the links that you need. You guys will get copies of the email. Take advantage of the 80% off, guys. It ain't going to be there forever. So we went through all that. Summary thoughts. Pat, what you got, baby?
I just want to go back to the dead money idea, where you're not locking up 50, 25, $100,000 in an account, taking 100% of the risk. No matter what, guys, you're gonna have some costs. It's the cost of doing business, your education to perform the method to a level to where you can be consistently profitable. That's the cost of doing business. Those costs don't go away. But this is the same exact thing as, why are you going to build a brick and mortar business from the ground up when you can do a web-based business and all that expense is no longer there, that money's not locked up, and you don't have to kill yourself to get it back?
Thank you all for your time. Pat, thank you, sir. Guys, appreciate you all, and we will all talk soon. Thanks again. Talk soon.